Right, so now we're moving to our next panel. The moderator of this panel is Weronika Czarnecka, who's the expert for the MIT EFCEE. And this panel will be talking about investing during a crisis. In this panel, there will be Konstantin Gnyp, an associate at Runa Capital, Gonzalo Tradacete, founder, managing partner of Faraday Venture Partners, and Antony Tikhonov, business development Seedrs. So I do hope you tune into this panel as well. See you soon.
Hello. Welcome everyone, virtual guests. Today, my name is Weronika Czarnecka. I represent MIT Enterprise Forum, and today I have a pleasure to moderate investor panel together with Gonzalo, who is the founder and managing partner of Faraday Venture Partners based in Madrid. With Antony, who's responsible for business development of Seedrs based in UK, and with Konstantin representing Runa Capital based in US. And we would talk mostly and focus on the situation caused by coronavirus, how it affects funding and how it affects you entrepreneurs. And we would love to give you a list of best advices for the next several weeks. So if you guys could please introduce yourself first briefly, just a short speech about what you do, what your organizations do. Gonzalo?
Okay, shall I start? Okay. Thanks a lot, Weronika, and thanks World Summit for your resiliency, for being able to put everything online in such short period of time, and for your invitation to this panel. In our case, Faraday Venture Partners is at the moment the biggest private investors club in Spain, and we've detected an opportunity to build a network of private investors club in Europe with the objective to unite the early stage investment ecosystems for the benefit of the whole European Union economy and innovation, and for the benefit of our investors and the founders of the companies that we invest in. So at the moment we have clubs in Spain, in Germany, we opened at the end of last year, and in Portugal, we just opened in January. And we will be opening this year another club in Benelux from Brussels. And next year, hopefully, we will be going to Poland to open our Polish club and our Italian club. We invest a minimum of 200,000 euros. We invest early stage, a minimum of 200,000 euros per first entry ticket. We try to enter with a minimum of 6 months of sales. Okay, but with moderate still valuations. We are very prone to invest in follow-on rounds because we're not a fund. Therefore, we don't really have limited resources. Every single month, there's 5 to 10 new members coming in the different clubs across Europe. So our follow-on rounds are usually bigger because we already know the company, and because we are much more members than we were when the first round came. And our main focus is commercial. We try to do everything we can to push the sales, healthy sales with strong recurrency of our companies. That's our main focus. For that, we try to share best practices to leverage our network of private investors. We are 221 members across Europe at the moment, and try to advise them in the thing that probably we are most expert doing is these financial projectors and financial modeling to make sure that they are able to raise the next rounds of financing and the correct valuation with the correct amount, etc. So that's our main description.
Perfect. Thank you a lot. So Antony, may I ask you to introduce yourself?
Sure, Weronika, thanks very much for the introduction. Guys, everybody who's watching, pleasure to be here. Thanks for inviting. My name is Antony from Seedrs. I basically take care of Seedrs operations, Seedrs deal flow across the CE, the Nordic, the Baltic, and the DACH region. Seedrs is the largest equity crowdfunding platform in Europe right now, and the UK's most active private investor in 2018 and 19. So in terms of the top level numbers, we have done more than 1,000 financing rounds already, and about 1 million euros has been invested through the platform into the startup. We are a sector agnostic investor, so we invest across pretty much all the sectors, but there are 3 sectors that are in the way core of our portfolio. This would be fintech, food and beverage, and home and personal. In terms of the tickets that we do tickets starting from 100,000 up to as much as 8 million. So the companies in seed through actually Series B can apply and raise funding through our platform. Like a lot of people would say, okay, equity crowdfunding platform, probably B2C focused. No, we are pretty much open for B2C, B2B, and B2B2C, any business models out there. In our portfolio, we have companies from pretty much all of them. And what's maybe different for us is that we do like to support companies throughout multiple financing rounds. So it means that the company comes to us and raises a round of 100K or 200K. They can happily come to us again in the next round and raise a part of their next round and go on. There are examples of companies that raised 5, 6 rounds with us. And maybe particular to Poland, we have 3 portfolio companies in the Polish region, and the cool one is actually, I think cool one, if I may say, all of them are cool, of course, but like one of my favorite ones is Hyper Poland. They are actually now raising still on Seedrs their second round. They about, I think that they are at 500K right now. So that would be pretty much introduction for myself for now.
Thank you a lot. And it's great to hear that you, Gonzalo, will enter Poland soon, and that you, Antony, have in your portfolio a few Polish companies. I researched it before. And now time for Konstantin, who has whose focus in CE region. Konstantin.
Yeah, exactly. Hi everyone. Thanks for the intro, Weronika. Very pleased to be here today. So my name is Konstantin. I'm from Runa Capital, venture capital firm. A bit of the story about our fund. It was founded back in 2010 by IT entrepreneurs, the founders of multiple big tech companies like Acronis and Parallels. For example, Acronis last year have raised $150 million from Goldman Sachs and officially became a unicorn. So the idea of their founding partners was like to help other entrepreneurs to scale their business and go globally. So right now we're investing out of our third fund. We like completely raised it. It's around like $150 million in size. We haven't announced it yet because now it's not the right timing because of all the news about the coronavirus, the stock market. We think that our news about the new fund is going to disappear in a couple of minutes. In terms of the geography, so like we invest both in the US and Europe. We have around 50 active portfolio companies, and the split is roughly 50-50 between North America and Europe. We have multiple offices in Europe, an office in Palo Alto in California. I personally based in Germany now, and like focus on CE region, as Weronika mentioned before. In terms of the industry focus, we define 3 main verticals. So the first one is B2B SaaS, pretty broad. The next one is deep tech, so everything related to techie stuff, infrastructure, open source technologies, middleware. That's something that we do really like. And the last but not least is regulated industries like fintech, digital health, and edutech. And we do have one company out of Poland in education tech sector. The name is Brainly, so probably you're familiar with this company, guys, if you are from Poland. In terms of ticket sizes, so like we are Series A investor. As a first ticket size, we usually invest from $1 to $5 million, and with follow-on rounds we can go up to $10 million. Yeah, this is very briefly about us.
Thank you a lot. So, so gentlemen, let's move to the main topics. And I think the hottest one, which is on the lips of everyone for the last several weeks, is the coronavirus. So, how in your opinion it impacts, it affects the fundraising, and what it has changed both for startups and for VCs? So, Konstantin, maybe we start with you as your fund is US based, and still US is the kind of trendsetter in investing.
Yeah, so yeah, let's start probably with fundraising for VC funds first. First of all, I think that it's going to be much more difficult to raise money, since their VC need to raise money from the limited partners that have less money to put into their alternative portfolios, and venture capital funds firms their alternative portfolios for these like limited partners. And since the market has crashed, so in fact, those LPs may want to double down on the lower prices available on the stock market in the hope of making a relatively quick buck now. So yeah, for VC funds, it's going to be pretty challenging to raise capital now. And in terms of their fundraising for startups, I think that overall fundraising activity is going to slow down a little bit. At least I already can see that like VC funds decide not to make any investment decision for the next couple of like 2-3 weeks. So it definitely will affect the fundraising for companies. I think it will not affect that much their US market, since they do have much more capital compared to Europe, and some VC funds will definitely see an opportunity there. So an example, 30% will slow down their investment activities, and the rest, the competition is going to be less keen. The valuation is going to drop. So some firms that were not able to invest in some, interesting companies because they were not invited to the round will be able to invest now. So overall, I think it's going to be quite stable in the US, while in Europe, I think that we're going to see a slowdown in investment activities in general, just because there are less VC firms, less capital, and the market is not that established as in the US.
Okay, this is interesting perspective. So Antony, how do you think that Europe will especially slow down? I mean, your model is different. It's not the fund, it's crowdfunding platform, but still.
Yeah, sure. I'd also love to split this question basically into the two parts, because there's kind of two big parts in this question. It's how is it going to happen for the startup, it's what's going to happen for the investors. And Konstantin has mentioned some of the stuff about the VC space. Basically, I would pretty much agree about the VC space. And I'd like to look at it from maybe a kind of retail investment space, because Gonzalo is going to probably cover the business angel perspective. So basically for the retail investors, we need to understand that the retail investment space, all of the investors are people, and there's psychology behind people, and it's no different for a VC, for any kind of investor. There are people behind it, and there is psychology behind it, and we are now in the times of crisis where there is uncertainty, and lots of people deal with this uncertainty in a very, very different way. So in this situation, my opinion is still as it was before. All the crises from before have shown us that liquidity is the king. So it means that the people that do have this liquidity now, that do have sufficient liquidity to invest for a certain amount of uncertain time, which would be half a year ahead, those are the people that will be kind of actually more actively deploying the capital now. On the other, so it's kind of in a way you could see it's like this balance of things. On one hand, there will be investors that are now stepping down completely, deciding to sit on that cash and to be very careful, risk averse, to see how the situation is going to go because of the uncertainty. On the other hand, there will be reinvestors that see a great opportunity in terms of valuations. It's going to be lowering down what Konstantin has mentioned. They see a great opportunity actually now to deploy capital, to start investing more, to get maybe their better returns after the crisis is over. So our opinion is that now the situation is volatile. We are looking at everything that's happening. We are not sure how it's going to develop, but it's definitely going to balance itself up as the time passes. And those people that were not deploying the capital will step up now. And at the end of the day, the situation will be pretty much balanced, maybe a little bit kind of lower than before, but still quite balanced. On the other hand, if I may jump to the startups, so I do see it's pretty much a question of two factors for the startup field. The two really big factors. The first factor is actually the area where the startup is operating. We all understand really well. It's really the matter of like what area are you operating? Are you in the sector of travel, for example? This is a sector that is going down right now. All the numbers that you were supposed to hit in the Q2 probably are not going to be hit by the startups. And then there are certain sectors that are actually experiencing unexpected growth right now, just because of the crisis. And those are this is one of the factors that's going to be really influencing what investors are looking into investing at the moment. And the second big factor is actually the kind of operating structure of startups. And by operating structure, I mean, first of all, okay, the burn rate, but not only the burn rate for the startup, but also what is the amount of fixed costs in their overall costs. Can they actually reduce it? And or is there a lot of fixed costs? Is the burn rate so high? So what are the cash reserves? Did they have enough cash actually to go through this crisis? This is a second factor. So investors are going to be looking again into this factor and saying, okay, hey, do you have enough cash? Are you burning enough? Or can you actually really reduce the burn rate right now and go through that crisis or not? And then it all comes down to the valuation of the company. That's again what Konstantin had mentioned before.
Thank you. I love the perspective that there will be investors who will be even more eager to invest right now. Among all these dark news, I think this is a news that brings hope for entrepreneurs. So thank you for this. Do you think that the region plays a role here, whether the startups and investors come from Europe or from US?
In my opinion, the region plays a big role here. And I would actually not only see it as a US-Europe perspective, I see it from a very country-by-country perspective, depending on how the crisis is currently evolving. For example, we can see that pretty much I make an assumption that investment activity is really reducing in Italy, for example, because the people are worried about some other stuff. Whereas there are certain regions that the crisis is not there yet, so to say. So there's still the investment activity is still. So I would really split the whole Europe into country by country and see that what's going on in every country and how it is, what's happening there.
Interesting. So we will see in several weeks. How good are your predictions, guys? Okay, Gonzalo, so if you could please share your perspective with us.
Okay, very quickly. I do not disagree with everything that my colleagues Konstantin and Antony have said. Everything is possible, but we must reinforce the idea that we are at the peak of the uncertainty. So we really don't know. We will see what happens. So it's very different to talk about the investment situation, ecosystem, or sentiment now during the confinement, these 2, 3, 4, 5, 6 next weeks, than in 3 to 6 months' time. I understand that we are talking about in 3 to 6 months' time, because obviously in these 3 weeks it's going to be very difficult to close anything at all. Probably some companies that sectorally, vertically are very well oriented towards this new situation and this peculiar situation now are going to be able to receive funding. But most of the funding, I think, during these 3, 4, 5, 6 weeks will be directed by VCs. I mean, professional investors will be directing their investment to support the contingency plans of their portfolio companies. Not really new investment, unless these new investments that totally fit the current situation. In 3 months' time, we will see. Konstantin was saying, okay, LPs are probably going to have the private LPs. That's important. A rebalancing effect between capital markets and alternative investments, and therefore they should be taking things out of alternative investments and probably disposing of liquidity to be able to catch opportunities in capital markets where they have liquidity, whatever. Yes, but there will also be huge public funds available to intermediaries that are able to create that are able to detect the companies that are going to be able to create the best employment in the smallest time frame. And there will be huge amounts of money for that if this epidemic lasts a bit more or destroys more value. So let's count with the public funds, which are a lot. Okay, so I don't know if it's going to be better or worse for the VC fundraising activity. For the startup fundraising activity, it would be, I think, as always, because the startups, I wouldn't, I would try to remember that they are very much uncorrelated. I was reading yesterday an article, during the last crisis, there were a lot of interesting companies that are now unicorns that were created. And it's not because it's better during the crisis, it just doesn't matter. You're beginning from zero. Okay, if you're in a war, or if you are in a particular crisis, now is not the time to create a travel business. But if you are a good entrepreneur, are resilient, and have creativity and ambition and work capacity, you'll be able to create a startup in any way. And if you are able to prove that you are really providing a valuable service product to your client base, there will always be investors that will be betting on your opportunity, because it is growing and you're proving your execution skills and the value of your product or service. So I don't think it will be enormous change according to the information now. Okay, if we still all confined in a year time, we are not imagining that situation. If in 2 months time there's a vaccine, in 3 months time, 6 months time, and we feel a boomerang effect in the economy, and we have price to earnings ratio in capital markets that are well above what we had before the crisis, then we will be thinking of another totally different situation. So the most important thing for me is we are really in the peak of the uncertainty. We need, and let's jump into that, to make our contingency plans to make sure that we last as long as we can to be away from this peak of uncertainty and be able to take better decisions, because we know, we feel we know what is going to happen, and try to maximize the cash. But let's jump into the advices now afterwards. So I really don't know. All the arguments that Antony and Konstantin were saying were correct, but if you think in another way, it could also be correct. And we don't know, because we really need this 1-2 more weeks to see what the landscape, or to have a better grip on what the landscape of the VC fundraising and startup fundraising will be in 9 months' time. It's really been a week and a half we're in this situation. So.
Okay, gentlemen.
May I?
Yes?
Is it okay if I ask a question, Gonzalo?
Of course,
it's taking a little bit of the moderation here. How is the situation, in your opinion, with the kind of business angel investment? Because what I see with the companies that I'm speaking now, quite a few of them saying that business angels are actually pulling out of the deals. In some of the conversations, I hear that, because this seems to be also in an area that's quite vulnerable towards uncertainty, that want to really pause the operations. How do you see that? You are in the
I've seen a crowdfunding platform yesterday raising 800,000 euros for a Spanish company that makes house bicycles connected to the internet to make sport at home, and punching bags for boxing at home, connected and stuff. I've seen just now, 2 days ago, in Spain, okay, 800,000 for a very early stage, but totally oriented to the real necessity now. There are people who don't care to pay 1,000 euros for a bike if it's a nice bike and if they can do sport at home. And okay, let's detect, we are entrepreneurs, let's detect the new necessities and provide a solution to them. And if you are proving that your sales are increasing because you are really solving this problem, there will also always be business angels, VC funds, individuals through crowdfunding platforms that will be raising. 2 business angels, 3 business angels that we're going to participate in a round. We've just closed 500,000. We put in 270 more or less from Faraday, and the rest was going to be put by another VC fund. The VC fund said, okay, I'm only putting half. I need to put some money aside for if ever my portfolio companies need it, okay? And therefore, but the other 5 business angels that wanted to enter the round, they're entering and they're not reducing their. It's a particular case, I know, but that's what I'm living every day. Yesterday and before yesterday, these were 2 occasions.
Okay, gentlemen, so we have around 6 minutes left. So what are your advices for companies? How do you support your portfolio companies? So 1.5 minutes for everyone. Antony.
just one thing, or how many can we say? And look, I'll
As much as you wish.
I'll maybe start with the really simple things. The most important things is now to stay safe. So the advice would be, the advice number one would be not related to investment or anything. It's related to basically stay safe, stay home, take care of your family, take care of your team. This is super important times that you actually need to also kind of care for the ones that are around you, because it's a difficult situation for entrepreneurs as well. And entrepreneurs, they not only care for basically their families, but also for their teams and their kind of the whole company. There's a lot of responsibility. So now I would really recommend to basically, first of all, cut on spending in terms of like, if you can go more lean, go more lean. This is super important now, because we don't know what's going to happen. We are talking this word uncertainty comes up quite a lot. So we're talking uncertainty. So we don't know what's going to happen. So it's important to really concentrate on operations and stay really, really lean. I do say to some of the companies, hey, now it's the time to do your homework, work on the things that you were kind of postponing, work on the platform, work on the hardware, work on the stuff that you were postponing in terms of like, you were prioritizing the growth rather than working on the product. Now is maybe the good time to take that time to working on the product, to take that resources toward that. And maybe it's also important to kind of, now it's the times that it came like this. So from kind of 1, 2, 3 days, and then like, okay, everybody has to work from home. When you imagine managing a team of 20, 30 people, it can become quite a quick shift, you know, so it's really important to have the right mechanisms now in place to be able to manage and to run their operations the way they were run before, as efficient as before. So I would also recommend to spend enough time in making sure that the operations that are done are run in an efficient way as they were done before from the office.
Cool, thank you. So take care, stay lean, and be efficient. Thank you. So Gonzalo, what's your advices?
Okay, 4 steps. And this is for companies that are negatively and hardly impacted by the coronavirus crisis. First, communicate transparently and a lot with clients, providers, employees, and investors. At least once a week, frequently, with maximum transparency. Second step, but most important, implement your contingency plan as soon as possible, reducing costs, etc., and then leaving offices, whatever, but minimize your cash burn through the cutting expenses. Maximize your cash with, first, customers, providers, if you can. Second, government loans through banks or through other. In Spain, yesterday came the schemas. Then creative debt instruments. And the last resource would be equity, because you will have a problem with valuing your startup in this moment, and you will get very diluted at a moment which is not very good. So, and last but not least, think about opportunities. This is a change, this is a crisis, there's new necessities. You are an innovative entrepreneur, you have technology, you have a team, you may be able to provide some solution to some of the necessities, and it may be a line of business for you. So that's the 4 steps that we are doing with every single portfolio company, and we're putting together a debt fund from Faraday partners to try to think companies from our portfolio.
Okay, Gonzalo, I lost you. So just to repeat once again, communicate, be transparent, contingency plan, maximize cash, and think about opportunities. Konstantin, your turn.
So first one, on fundraising plans, if your company might run out of cash in 2020, then you should start thinking about the fundraising now, not wait until the situation gets worse. The funding usually takes several months, and in this situation it can, go up to like 6 months and even more. If you have some deals on the table already, please try not to negotiate price for longer. If it's like make sense price, and probably sign a term sheet and wait until money arrives on your bank account. And then keep your existing investors close for a bridge round. Like, if you will not able to raise any capital, your investors should know that they need to provide the bridge unless they want your company die. And then we have 1 minute left on enterprise sales, because it's going to be affected the most, especially in this situation. So proactively turning meetings into the video calls and webinars, not wait until they to be canceled. Then switch your marketing budget from physical into digital demand generation channels, so like online marketing, and then switch digital contracting and invoicing where possible. Like, assume that people will not have access to a printer, scanner, and their post offices. And yes, try to stabilize churn. If you see that some clients are churning, try to provide the discounts, because you don't know when they're gonna come back after the crisis.